Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So guys, we're going to go over the overall portfolio value. And I can warn you now, it's a pretty red day. I'm going to go over the overall value, of course, the value by the metrics, the buying power, where that's going to be sitting at the end of this month, as well as the individual holdings. See if some stocks are affected by the tariffs. Some stocks probably are not as affected. Let's take a look and see which stocks are deals and which ones are still actually doing pretty well, surprisingly, even though we've had a lot of bad news and a lot of news affecting the overall market. Then, of course, we're going to take a look at the watch list and what prices I'd be purchasing these at and adding them to the portfolio officially. So jumping in for today, we are down about $600, about 1% in the red. The 1 week mark, we're down $5,100, 9% in the red. And then the worst metric on the entire list, for the 1 month mark, we are down $5,600, down 10%. So guys, this is a bone-chilling loss, right? That's a lot of money, right? That's enough to pay off my car loan, essentially. I lost my car in a month, which is insane. But the reason why I enjoy seeing this red, it's kind of, I know it's kind of opposite of what it should be, but mentally, it's very difficult to lose money, right? It's the same pain as a breakup, essentially. And this is where a lot of investors get spooked out, right? Almost $6,000 is a lot to lose in a month. That's a lot to lose. Think of if you lost it at like a casino and that money's just gone. That's essentially what's happened. The reason why I'm not freaking out about it is because some of that technically just means that some of the stocks could have been overpriced. Some of the stocks are affected more, and that is an opportunity. So when you see a 10% drop in your portfolio value, there are two ways you can look at that. Either, oh my God, I've lost so much money and I need to sell out of everything. The market's over, the world's over. We need to go into gold bars and go into little bunkers and under our houses so we don't have to worry about anything. The world's ending. Or, okay, I lost $5,600, I still have $50,000. All right, if you have $100 and somebody steals $1 from you, you still have $99. Does it suck that they stole the dollar? Yeah, but in the grand scheme of things, losing $5,000-$6,000 when I still have 50, not a big deal, right? Especially when you can turn that 10% loss into more money if you add. That's really the key here. So yes, that's a scary metric. It's hard to look at. 10% loss in a month is a lot to lose, but let's see what opportunities we can take advantage of within the portfolio. Buying power, sitting at about $30 a share. That will be going up to over $300 by the end of this month. So, Realty Income. The goal for this is to supplement my income in retirement. If I make $3,000, I want Realty Income at my job. I want Realty Income to pay me $3,000. That way, either Realty Income outpaces my income or my income outpaces Realty Income. And either way, I'm going to put my salary within the market. That's the long-term goal. But as of right now, Realty Income is just going to help companies like Visa buy me a share of Coke. That's the goal for today. The long-term goal for this position is to supplement my income. So we have 5 shares as of today. Market value sitting at $266.70. Average cost is $52 per share. 0.5% of the portfolio is in Realty Income. Today we're down $9. Total we're up around $8, up $3. So a dividend coming in of April 15th of $1.34. So guys, this is one of those that has not been affected as much. It has dropped about 5%, but it hasn't dropped a crazy amount. In the month, it's dropped 10%. So it's kind of matched the market, but it's actually outperforming companies like Apple, like Google, like Visa, because REITs are less affected. I believe this REIT is less affected by tariffs. They're going to collect their rent money. It's not like they're sending exports out to China every month for like Nike shoes or for like their chips or their processors or anything like that. They own real estate in America and I think some in Canada. And they just collect their rent checks every month. So while the companies that they get rent from might be affected, I don't think Realty Income is going to be as affected because they don't have as much international business. I think most of their properties are like in Texas, New York, and California, I want to say. So overall, they're peppered all over the US, but overall, it's a domestic company, right? It's not an international company. So they own a lot of American real estate, which for the tariffs, tariffs' goal is to essentially make sure we export as much as we import so we don't owe countries as much money. And I'm assuming the long-term goal for America is to pay off their national debt. That's the goal, right? And it's to stop lending these countries money for their imports. And so, since Realty Income isn't exchanging in that, I think overall they're going to do better than companies like Apple, Visa, etc. They're going to be less affected, which is a good and a bad thing. It's good because the portfolio, of course, I don't have a lot of money now in Realty. I did before I had about 10 grand. But a company like this is going to be one of those steady eddies that doesn't get affected as much because Realty Income and technology companies or international companies or companies that move product internationally they're not on the same, they're not going to get affected the same way. So this is kind of insulation. I love Realty Income anyway because it's a monthly payer. I love the tenant base. I love that they've never had occupancy under 90% in none of their history. It's been lower than that. So I love the economics of the business. I love the way the business model and how it is set up. And I would love for it to be a bigger position. And it was before I sold for my car. So I want to get it back up to that 10K range. But I'm not surprised to see that it's less affected. In fact, I wouldn't be surprised if it goes up after some of this news. But I will definitely buy if it gets closer. I mean, it has dropped. I think it's probably close enough to my average cost. It's not like, $60 a share around where it was. So, I mean, it is a near buy for me. And if it drops down to like 51, I mean, even here, I'd be okay buying it. But this is one of those that I'm excited to see how, in the next 3 to 6 months, how this specific company performs. Because I think this could be one of those that either go up because people are buying more of it because they see real estate as a little bit of a safe haven. Or maybe people sell out of it because they want to buy the overall market index. I'm not sure. I have no clue what's going to happen in the short term, but I'm not surprised to see Realty Income doing better than companies like Apple and Nike. Next up, we've got Altria. This is kind of in the same vein as Realty Income. So they do only American cigarettes, right? Philip Morris International, which was their parent company, does all the international stuff. So I would not be surprised to see Philip Morris International having an issue versus Altria. But as of right now, it's sitting at $55.86, 320 shares, $17,000 of market value. Average cost is $47.27. 35% of the portfolio is in Altria. Today we're down $73. Total, we are up $2,700 and 18% return. Dividend coming in enough to buy Apple, enough to nearly buy 2 shares of Apple, actually, of $326 at the end of this month. So guaranteed, regardless of whatever goes on with tariffs, whatever politically happens, whatever country decides to tariff us, none of that matters to me. All that matters is how I react to that news, right? I don't care how stocks react. Losing money in the short term is not going to bother me. The only thing that's going to bother me is if I don't take advantage of a situation, right? And Altria is my main golden goose to be doing that within the portfolio. Because I personally think that Apple's going to be one of the most affected companies, and Altria's goal is to buy me at least 1 share. Now, as of right now, it's close to buying me 2. And if I add any money from my actual job, my paycheck, I'll be able to buy more. So those viewers that have watched the channel for any considerable amount of time know that my goal is to buy 2 shares of Apple every single quarter, or every single month, right? So every quarter this pays me, so I get 4 payments a year. Now, if Altria can now buy me 2 shares, that means I will be able to pretty much hit my goal guaranteed with just Altria payments, which is awesome. Because 6 shares plus 12 is 18, so I only have to buy 2 shares. So it's guaranteed I'll get my goal within a couple of months. But what if I get above that goal because of Altria? That's my I hope I get more, right? But Altria is the main candidate for my entire strategy. Altria forever now buys me a share of Apple below 320. And it can actually buy me, as of right now, a share of Apple and a share of Google, which is freaking awesome. So anyway, guys, I'm interested to see if Altria goes down. I don't think it will because it's more American based. But if it does drop, down to like below that 47, 46 range, I'm buying more. Next up, we got Coca-Cola sitting around $70 per share. We have 15 shares, $1,000 of market value. Average cost is $60.54. 2% of the portfolio is in Coca-Cola. Today we're down $26. Total we're up 100 with a near 13% return. Guys, this again is one of those that's not as affected as of today. I would not be surprised to see Coca-Cola going down, but if it does, I definitely will take advantage around that $60 mark. So I'm still, $100 in the green. It's not as much because it's a smaller position. It's only $1,000 market value. But this is one of those that's going to be a top 5 company, and I would love for a good buying opportunity on Coca-Cola. Next up, we have the golden goose of the opportunity, in my opinion, being Apple. Down $8 today, down $35 in a week, down $50 this month, down $60 in the last 3 months. And year to date, down almost $70. So Apple for me is the best buy. We have 12 shares, around $2,200 of market value. Average cost is around $218, so I have a huge cost out average opportunity here. 17% loss. 4.3% of the portfolio is in Apple. Today we're down $93, 4% loss. Total we're down $450 with a 17% loss. Guys, I want Apple to be the single biggest position in the entire portfolio, so you will be damn straight to know that I am buying it here. I will buy it forever below 200. I don't care. If I can buy 2 shares instead of 1 every single month, I will do that. If I can buy 3 shares instead of 2, I will do that. I will do anything and everything in my power to buy a couple more shares of Apple at these prices. And I would be, one of the things about the stock being this low, or being close to this low, is I'm interested to see what Buffett is going to do. Because Warren Buffett has been selling, he's been a net seller of Apple stock for quite some time. I think it's been about almost at least a year, because I know last year at the Berkshire meeting, one of the first questions, or the first question, was asking about their Apple position and that he shrunk it down. Now it's 20%. Before it was almost 50% of his portfolio. It's like 43%. And it will be interesting to see how he maneuvers the questions about Apple, because he's got like $300 billion in free cash. Apple, I believe, his reported cost basis price was around $160. It's at $180. So, like, it's not as good of a value, but it might be as good of an opportunity. So that's what I'm interested in with Apple is I'm interested at these prices, right? I was interested at 200, and I'm really interested at 180. But I'm interested to see what Berkshire's going to do. I'm wondering if I would not be surprised if they switch and start buying it again, because it's near that value that it was at like 5 years ago when he bought it. And I think overall the balance sheet is better. I think the product line is just as healthy, right? And for me, the main thing when it comes to Apple, why I want to own it, is the services segment of the business. I care about how many iPhones they sell. I care about the MacBooks, I care about the AirPods, all of that. But for me, it's less about how many units or items they sell of the iPhone. So them not telling me how many they sell doesn't bother me. For me, it's about how much money do people spend on their iPhone. That's my goal. That's my main thing. That's my growth factor for Apple. So I'm interested to see if it's asked about at the Berkshire meeting. And I'm also interested to see his response, specifically on Apple stock. And I do think that Apple, I think it will be very affected, of course, by the tariffs. And I'm hoping that it's a long-term, a more mid to long-term thing, so I can continue to buy up at these prices. Next up, we got Abbvie at $185.10. We've got 95 shares, $17,500 worth of market value. Average cost is $95 per share. Around 35% of the portfolio is in Abbvie. Today we're down $200, 1% loss. Total, we're up $8,500, around a 94% return. So guys, I have gotten some questions about this holding. People are asking me, why haven't you sold? Why are you holding on to it? Obviously, you lost your triple-digit return, right? That's fine. It does not bother me to lose out on a triple-digit return. I'm in Abbvie because I believe in the economics of the business. I think that they've been less hit by the overall news, and I think that's interesting. I think a lot of pharmaceuticals got slammed. So Abbvie did, I mean, it's dropped 14, 15%, right? So it's dropped, but it's not Apple. It's not down, 30, $40 a share. So it's not Visa, it's not Apple. It's not an opportunity for me yet because my average cost is 95 and I don't want to go up. It's still nearly double my average cost. But if you were buying it at 220, then this is obviously a good price. So for me, economically, I believe in Abbvie. I'm surprised to see it affected, but I'm surprised it's not as affected as much as some of the other pharmaceuticals. So for me, it's a sit and wait. I would love to buy more. I'd love for it to hit that $100 mark, but it's going to take a lot. I think it'll take more than tariff news for it to drop that low. Visa is very interesting because I believe on a price basis, I mean, Apple's at 220. Apple's dropped about $40 per share. And so has Visa but Visa's got a volatility warning where Apple does not. So that intrigues me a bit. But I have it's sitting at $312.63. I have 35 shares, around $11K worth of market value. Love Visa. Average cost is around $350. 21% of the portfolio is in Visa. Today we're down $24. Total we are down $1,200 with a 10% loss. Guys, Visa is one of those high quality companies. You could say the same thing about Apple, that does not go on sale very often, right? I mean, if you look at the 1 year chart, it's had some bumps in the road, but generally it's going up, right? Got up to 361, then dropped down to 330, but it hasn't been below below that $300 mark since around October of 2024. So it's been 4 months, but overall, if you look at the 5-year chart, it's been a pretty steady growth stock. 2022, everything kind of dropped. 2020, everything kind of dropped. So over the course of the past 5 years, it's been below this price, right? 313 is not a huge dip for Visa. Like last year in August, you could have got it at 260. 4 years ago, you could have gotten it at below 200. So $300 is still a pretty big markup, but it's such a good business, and it does such a good economic, it fills such a big economic need for people. Visa is the Disney of payment processing, right? I own Visa in my wallet, so I should own Visa in my portfolio. That's kind of how I picture it. Is I should own it because I use it every day. I just went to Domino's this weekend and I used my damn Visa card. So shit, if I own both Domino's and Visa, technically I'm profiting. Essentially, I gave my money to those businesses, so when the EPS comes out for Domino's, I'm a piece of that, right? I'm a part of those numbers. Same with Visa. They processed my payment, they took a little fee, I'm a part of Visa's numbers as well. So overall, guys, Visa's just such a high quality company. I would definitely buy it at these prices. At a near 40% drop, or at a $40 drop, I'd be buying no matter what. So just for me personally, I am more interested in Apple at this moment because I feel like the bottom is not here for Apple. The bottom is probably not here for Visa either. But I think there's a longer and deeper drop for Apple. I don't think it's a one news story. I think more is going to come out, and I think it's going to be more bloody for Apple. And I think it's going to be more of an opportunity for Apple. Then, of course, Google is at 150, 7 shares, $1,000 of market value. Average cost is 187, so down about 37, almost $40 a share on this one too. 2% of the portfolio is in Google. Today we're up $15. Total we're down 260 with a 20% loss. So guys, Google's been having a lot of bad news. I mean, the DOJ lawsuit, the search thing, they took away Chrome, now there's tariffs. So this one's been beat up a lot. And while I think it's still one of the most high quality companies in the world, I think it's one of those that now there's more news out. And I could be wrong on everything that I'm thinking, right? Nobody knows. But for certain what's going to happen. I think that when it comes to opportunities, I feel like Google's going to be at a lower price for longer. I feel like Visa is going to shoot back up the fastest, and I feel like Apple's actually going to get beaten up more than both combined. So overall, I think Apple's a better buy. Like numbers wise, I think it's Visa right now, but if I was going by opportunities, it'd be Apple, Visa, then Google. So even though I did buy a share of Google this past month, I'm more likely at this point to be buying more shares of Apple because I feel like that's a deeper value, and I think it's going to be a longer opportunity, and it's honestly going to be a bigger position for me. So it's just more logical to put money into Apple. But then on the watch list, I'd buy Costco at 900. So if I had $1,000, which I do, but if I had $1,000 I wanted to put in the market, I wouldn't be mad. But as of right now, I think Apple's a bit better of a value than Costco is. I mean, year to date, it's dropped not as much as I thought, but it got almost up to 1,200, and it's sitting at 9. So you have a $200 upside here on it. So good upside on Costco. Great dividend growth stock. Company management's amazing. Love the economics. So overall, it's a business I want to own, and I owe myself a share for Charlie Munger too. Then Berkshire, I'm kind of surprised to see that it's been dropping as much as it has. I honestly thought with the tariffs that people were going to run into Berkshire, and I'm okay for being mad. I'm not mad about being wrong about it either, because I've wanted to buy it for quite some time. So this might be a good buying opportunity for anybody looking to get into Berkshire Hathaway and were scared. They were scared of that $500+ price point. This is a great time to buy it if you owned it above $490. So like if you owned it at if you loved it and were buying it at 500, you should love it at $490. So definitely would be buying here at these prices, but I'm interested to see. I'm okay with being wrong, right? Like the thing is, if I say, oh, everybody's gonna run into Berkshire and they fucking drops, of course I'm happy about it because I can buy it at a discount compared to where I think it should be at, and because I did the opposite of what I thought. That's why economics is such a joke, because you can never guess what's gonna happen. But I'd buy Berkshire at these levels. So overall, guys, losing money in the short term does not bother me. Look at the deals. The lower the stock price, the more upside potential you have and the more money you will make over time. So I'm thinking Apple right now is going to be the best buy, and I'm going to try to buy as much as I can. With that being said, guys, thank you so much for watching. Remember to hit the like button on my channel. Like button on the video. Hit subscribe on my channel, That Dividend Guy, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.